So one, you can come in as a cash investor and put money into the fund. What we're working on is also allowing investors who have current rental properties to come into the fund. And there's an interesting structure that we're working on that would allow someone to effectively sell the home that they've held as a landlord to their tenant, either their existing tenant or potentially a new tenant.
So if I'm an investor into the Ownify fund, which it sounds like I'd be let's say I don't know if it needs to be probably a credit investor, passively investing. I put $1 million in today. Let's just say it goes into across 6 houses, or let's say an average is 400,000. Let's just say just 2 houses, just 2 at 500 each, right? What's kind of the return expectations there and numbers? How do those look in, Frank?
Sure. So target IRR over the 5-year hold period in the fund is 15%. And that's really a combination of the cash rental yield, which so far has been about 5.8%. That's what we generated last year. We continue to generate that going forward. So that's effectively the rental income, minus property management, taxes, insurance, maintenance, and that gets paid out to the investor. And that's a quarterly dividend, right? So that can either go back into your fund and increase the balance, or you can take it out, in which case it gets taxed. But that's the cash on cash return. And then you have another, so far we've seen 6%, but again, it's early, home price appreciation, right? And this is back to picking the right assets in the right markets and having a good model around that. And then aggressive entry pricing, right, to make sure that we generate home price appreciation. So you have the cash on cash return, home price appreciation with a little bit of leverage, and we've been very conservative on that. We get to about 15% IRR. And you're right, it is for accredited investors only, at least today. That's the exemption we have with the SEC, and that's how we're building the fund. There are a couple of interesting things. So one, you can come in as a cash investor and put money into the fund. What we're working on is also allowing investors who have current rental properties to come into the fund. And there's an interesting structure that we're working on that would allow someone to effectively sell the home that they've held as a landlord to their tenant, either their existing tenant or potentially a new tenant, by contributing the home into the fund. And that's an interesting tax advantage transaction called the 721 exchange, where you contribute your real estate into the fund. And we then use that real estate and that structure we've built, that fractional ownership structure, to sell that home to the existing tenant, right? So for landlords out there and investors out there who have existing single family homes and maybe tenants who are living in them who are interested in buying them but can't make that down payment hurdle, we're working on a structure that overcomes that and allows the investor to take advantage of that 721 tax defer exchange effectively.